Hey everyone, today I want to talk about something that most of us hate thinking about but need to address: car insurance. Everyone sees the commercials with the people becoming their parents or Flo talking about bundling all your insurance, but I didn't realize how much of my monthly budget was tied up in car insurance payments, and I certainly didn't know how much my premiums had crept up over the last few years. If you're like most people, you probably think about your rent, car payment, and phone bill as your main monthly expenses, but there's a hidden budget killer that's gotten way worse recently: your car insurance premiums. Did you know car insurance costs have skyrocketed 80% in the last decade? The average cost went from around $500 in 2015 to over $800 in 2025. And just in the last few years, rates jumped 45% due to inflation. In fact, car insurance has been the biggest contributor to inflation in the US, making up over 20% of total inflation in the economy. If you thought eggs were the biggest impact to your budget this month, double check your car insurance bills. For most Americans, car insurance is now their fifth or sixth biggest monthly expense. And the worst part, most of us are paying way more than we need to. Let me explain a bit why rates have gone up so dramatically. Vehicle repair costs have increased significantly with more advanced technology in cars. Medical expenses from accidents continue to rise faster than general inflation. Severe weather events have become more frequent, leading to more claims. Supply chain issues have made replacement parts more expensive and harder to find. And more drivers are on the road post-pandemic, increasing accident frequency. What's crazy is that even with these market-wide increases, the difference between the highest and lowest rates for the same person can be hundreds or even thousands of dollars. Let me tell you what happened to me last month. I was picking my son up from school, waiting in that endless parent pickup line when I decided to finally look at my insurance costs. So my friend Donna had been telling me about this comparison tool she found, but I kept putting it off because I thought it would be complicated or that I would get bombarded by sales calls. Well, I was completely wrong. I spent exactly 8 minutes answering some basic questions about my driving history and current coverage. That's it. Just 8 minutes while sitting in a car. The site instantly showed me quotes from several top insurers and I was shocked. The lowest quote was $437 less per year than what I was currently paying for the exact same coverage. Think about what you could do with an extra $437 a year. That's a weekend getaway, a dinner out each month, or just a significant boost to your savings. So why are so many people overpaying? 3 main reasons. Number 1, most people only change their car insurance every 2 to 4 years. Number 2, insurance companies count on this loyalty and gradually raise rates. And 3, most of us don't realize how easy it is to compare rates now. Here's something most people don't know. Insurance companies actually have a practice called price optimization. This means they analyze data to figure out which customers are least likely to switch, then charge those customers higher rates. It's basically a loyalty penalty. The customers who regularly shop around and switch get the best rates. Another important thing to understand is how insurance companies calculate your rates. They look at your driving record, vehicle make and model, annual mileage, credit score in most states, age and gender, location and neighborhood, prior insurance history, and bundled policies. Each company weighs these factors differently, which is why rates can vary so dramatically between insurers for the exact same person. In the past, shopping for insurance meant spending hours on the phone getting quotes. Today, it only takes minutes online. You simply enter your zip code, answer a few questions about your car and driving history, see multiple quotes side by side, and select the best option for you. Even if you don't switch, you can use these quotes to negotiate with your current provider. So when I called my insurance company to cancel, they immediately offered me a lower rate, though still not as low as the new quote I found. Now, there are a few things to consider beyond just the price. 1, make sure you're comparing the same coverage limits. 2, check for any special discounts you might qualify for. 3, look at customer service ratings. And 4, consider the claims process. Now, speaking of coverage limits, let me quickly explain what those numbers mean. So you might see something like 100, 350 on your policy. That means means 100,000 bodily injury liability per person, 300,000 bodily injury liability per accident, and 50,000 property damage liability per accident. Experts generally recommend at least 100, 300, 100 coverage if you can afford it. Going with state minimums might save you money up front, but could be financially devastating if you cause a serious accident. The tool I used makes it easy to compare all these factors at once. But what matters most is that you actually take action. Most people know they could save on car insurance, but never get around to checking. And I almost didn't either, but those 8 minutes in the school pickup line put $437 back in my pocket this year. And you better believe I'm going to check rates again next year. Experts recommend comparing rates every 6 to 12 months or whenever you experience a life change like moving, buying a new car, getting married, or improving your credit score. Each of these events can significantly impact your rates. So if you're ready to stop overpaying, check out the link in the description. It's completely free, takes just a few minutes, and could save you hundreds. Worst case, you spend a few minutes not scrolling on your phone and trying to save some money. Click the link below to compare rates from top insurers now. It's free, takes less than 10 minutes, and could put hundreds back in your pocket this year.